A recession is... Who is that at the door? Guys, thank you so much for joining me in another video. Today I want to talk about how to beat inflation. As we emerge from the doom and gloom of lockdown, there are two phrases that keep bumbling around: recession and inflation. Recession and inflation. As this channel is about being better with your finances, getting richer and improving your financial situation and taking steps towards financial independence, I thought it would be worthwhile doing a video on how to beat inflation. So why is a recession bad? So a recession is 2 consecutive quarters of negative growth. Economic growth is a great thing. It provides jobs, it creates opportunities, it provides value for holders of capital. And then there is a trickle-down effect of all of that. So the reduced taxes, the lower government spending, and of course all of that is controlled because too much of it will lead to inflation. Now the quickest way to get out of a recession is to spend, spend, spend. The governments generally have a way to control spending, and that is by making spending easier. Provide the tools and the means, and then the results will follow. And the key way they do that is by manipulating interest rates. And then with interest rates really low, central banks print more money. It's a little bit confusing because no actual money is actually being printed. The central bank tends to jump in, buy bonds, pushing the price of bonds up, which in turn leads to spending and encourages borrowing. It's really interesting to keep your eye on the news right now. Governments have worked really hard to keep the consumer loaded, and that is by encouraging working from home, so people are spending less outdoors and thus improving their own personal balance sheets, while all the while the economy has slowed down massively. Now as we approach being fully open, it'll be really interesting to see how the economy recovers and how quickly it recovers, and what the stagflation is. I guess that's probably a video for another day. So what is inflation? So it's worth talking about. What is inflation? Every year the price of items increases, and simply put, that is called inflation. The inflation rate typically bumbles between 1.5 to 2.5% every year. Now in practical terms, if you put £100 into your bank hoping to spend it next year on a particular item, you will be £1.50 to £2.50 short next year of that item that costs you £100. It sounds pretty abstract as people don't really notice it, as it's normally built in small ticket items like the price of bread or milk, which you probably might not notice. And the big ticket items I suppose you might get on credit or may not track as much, and so you don't notice it. There is something really funny called the Big Mac Index, which economists use, and that is basically how much a Big Mac costs around the world for a fixed dollar amount. Now if you buy 2 Big Macs in the US, you would get 3 Big Macs in the UK. So guys, what are you waiting for? Come over, Big Macs are on me, if that's your thing. But essentially it's supposed to show the real value of exchange rates. And it goes to show if you're an economic nomad, you can reach financial independence earlier if you're in a different geographic location. Again, that's probably a topic for another video. The inflation rate of 1.5 to 2.5 may not sound like a lot, but if you think about it, as millennials, we would need £140 to buy the same amount of stuff that would cost you £100 in the year 2000, and that's only 20 years ago. If you grew up in the 90s, then you'll remember that we could buy a can of Coke for 40p from Mr. Patel down the corner shop. In all seriousness, it's quite important to know the impact of inflation, because wage growth is not growing at the same rate. So you're essentially getting poorer over the years because inflation is going up, but your pay increase may not be going up at the same rate. And then on top of that, if you start putting all your savings into a bank savings account, you're guaranteed to lose money because of the impact of inflation. And without going into the crazy detail that I have done in previous videos, banks want you to lose money, but they want to make money on your money. So think about the difference between the savings rate and the inflation rate. They're essentially doubling their money on your money, and they do way more than that anyway, and pay themselves handsomely for doing it. I'll link my video down below which goes into a little bit more detail if you are interested in that sort of juicy gossip. I do want to mention quite a crucial point, which is the mindset shift. A savings account is essentially a tool that you pay for. By saving for an emergency fund for a rainy day, you're paying the bank to keep your money by giving you a lower interest rate and profit from your savings. And the benefit you have is when you need your money, it's instantly there for you. However, it's not a way to invest, full stop or period. I do have a video on budgeting, which I'll link down below or here somewhere, which talks about 3 different pots for savings, investing, budgeting. So the question is, how do we beat inflation? So to beat inflation, you have to outrun inflation. So that is having your money grow faster than inflation. It's a no-brainer. To do that, we have to make our money grow faster than the 1.5 to 2.5%. So let's say 3%. Where do we get a better return on our money that is greater than 3%? Investing, obviously. Do your research, have reasonable expectations, and that will hopefully allow you to make the right choices. We see what the power of compounding can do when it works against us in the process of inflation, but make that compounding work for you by investing in funds or things that will make your money grow. There are lots of different things that you can invest in, so whether it's the stock market, whether it's real estate, whether it's bonds, there are different ways to invest in each. Just don't lay in the ignorance of not knowing where to put your money. Not being clued up is not an excuse. It's easy enough to learn the basics and implement a simple strategy to invest. There's so much information out there if you do actually look for it. In fact, I would even argue that the most simplest strategies are the most effective for 99% of people. The second way to beat inflation is to avoid inflationary products. Here's a bonus fact for you. Did you guys know that in the US, healthcare inflation is double that of inflation? In the UK, we have the NHS, so we don't see that. But we do see the impact on things like energy, petrol, and alcohol, for instance, which take on high inflation. So walking more, drinking less will have huge impacts on your health as it is, but also on your wallet. The third thing I'll talk about is to stop paying the bank. Debt can be very expensive generally anyway. The longer you have debt, the more interest that you're paying and the more money that the bank is making from you on your debt in the first place. It's nonsense, and being lazy is just burning your money away. The fourth thing I'll talk about is investing in yourself. I was talking about this exact thing to a friend yesterday, where we need to upskill constantly. Reading, learning, educating yourself, all of those things will allow you to broaden your mind and push your brain into action. Creating a business, going to talks and exhibitions, and learning from others in gatherings and talking to ambitious people is rewarding. As a couple, we did a YouTube course on budgeting, and it's changed our lives in the way we manage our money as a family. Likewise, reading and learning the basics of investing has made me more interested about how to make my money work for me and how I can get to financial independence. Nothing will get you rich overnight, but the key is to build your mindset so that you are taking steps towards that financial freedom and also providing yourself with the tools to build wealth over time. So that's a wrap for now, guys. Please do subscribe, comment, let me know what you think. I'd love to know what your thoughts are on this video. I'll leave a link down below on budgeting, compounding, and other videos that I think are just fantastic for you guys to watch following this. Okay, cheers guys, bye.